On this week's episode of the Crushing Debt Podcast, a guide to title insurance.
Welcome to the Crushing Debt Podcast with your host, Florida attorney Sean Yesner, where our goal is to help you get rid of the financial bullies in your life.
So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law, and I had a guide to title insurance emailed to me by a friend of mine, a title insurance company friend of mine. So thank you, Anthony Steele over at Marlin Title Company. I do work with a couple of different title companies here in the Tampa Bay area. And so this particular guide was sent to me by Anthony Steele over at Marlin Title Insurance. Now, I'll post the link in the notes so you all can download this guide yourselves, but it's basically at the state of Florida's website. So it's myfloridacfo.com, and then there's a whole bunch of /division, /consumers, /understanding coverage, /guides, /documents, /titleiinsurance.pdf. Now, don't worry about writing all that down. I'll post a link here in the notes so that you can download this guide directly from the notes. But this guide was put out by the state of Florida, and it's got some really good tips in there, so I wanted to go through it. Now, I do also want to mention the sponsor of the show, Sam Cohen of Attorneys First Insurance, and his insurance agency fits in pretty well to what I'm going to talk about here today, because Sam writes errors and omissions coverage or malpractice coverage for attorneys and title companies all over the country, particularly in the state of Florida. I know he's also got a focus or an emphasis on Texas as well right now, but he can write title insurance or find someone to write malpractice insurance, E&O insurance. He can either write it or he can find someone to write it pretty much wherever you are in the country. So a great way to support the show would be to support our sponsor. And a great way to support our sponsor would be to email an introduction to an attorney or title company that you know over to sam@attorneysfirst.com or www.attorneysfirst.com. Now, this guide to title insurance that I'm going to go over here is about 11 pages long, although the first and last page are the cover pages, table of contents. So it's really about 8 or 9 pages. There's a lot of pictures, and so substantively, there's a lot of content, although it's not a very long read. It's a pretty quick read. And so I'm going to summarize it. There may be some things that I talk about specifically. There may be things that I read specifically from the guide here, but I'll go through it here. So it starts with the introduction, something that I've said for years and years and years. Home ownership typically represents the biggest asset people will own and the biggest financial obligation most people will incur. In fact, owning a home is considered a fundamental part of wealth building, especially now in this day and age where property values are increasing. It's a great way to build wealth for the future. But there's a lot of questions that I get about the closing process, and I get a lot of these questions from people that are moving from up north down to Florida. The interesting thing is, up north, closings have to be done by attorneys, and by north, I mean like New York, New Jersey, those types of the northeast part of the country. Now, again, I don't know the laws specifically, but I do know that I get a lot of people from the northeast part of the country that contact me because they're moving to Florida, and this concept of a title insurance company is foreign to them. But here in Florida, title insurance title closing can be handled by a title insurance company, a title insurance agent, attorneys that are underwritten by a title insurance underwriter. Now, this guide says a notary can do the closing. Now, really all the notary can do is notarize your signatures on the closing documents. I don't believe the notary has the proper licenses just by being a notary alone, has the proper licenses to review the title, prepare a title insurance commitment, prepare a title insurance policy, all that other stuff. But a lot of times the title company or the attorney that's handling the closing may engage a notary just to help sign the documents, notarize the documents, witness the documents. But In Florida, it can be done by a title insurance agency, title insurance company, or an attorney that's underwritten by a title insurance underwriter. Now, Yesner Law is not underwritten intentionally by any title insurance underwriter. So Yesner Law, my law firm, cannot perform the closing. However, that's a fairly recent thing. I think I chose to leave my title insurance underwriter now 4, 5, 6 years ago, I think. However, the entire length of my career prior to that, I did do closings. I was engaged with my title insurance underwriter, and so I do know a lot about the real estate closing process. And if you have questions, give me a buzz. If you're in Florida, definitely happy to answer those. If you're outside the state of Florida, I may not be able to answer all your questions, but if you have questions about the closing process, title insurance, anything that I go over in this podcast today, please reach out to me, Sean, at yesnerlaw.com, and I'll answer any questions you have. But, you know, the role of the title insurance company, the title insurance agent, or the closing attorney is to manage all the documents, make sure all the documents are properly created and signed and witnessed and notarized as applicable, take in all the money, and then pay out all the money. One of the other misconceptions I hear a lot about a closing is, you know, is the buyer going to pay the seller the money directly? No. All the money goes to the title agent or the closing attorney. And I'll stop saying or closing attorney and just use title agent to mean whoever's doing the closing, whether that be a title company or an attorney. All the money goes to the title company, whether it be the deposit, the escrow deposit that the buyer makes, the loan amount that the buyer borrows, the proceeds, you know, if there's any cash necessary to close from the buyer, all the money comes into the title insurance agent, and then the title insurance agent or title insurance company will then disperse all the money. They send the payoff to the lender that's being paid off. They send the title insurance premium to the underwriter. They pay the clerk of the court for recording the documents and paying any of the transfer taxes. They pay if there's property taxes owed, association dues owed, a fee to the surveyor, a fee to this company, to that company. And all of that's going to be listed on the closing disclosure or settlement statement. So you'll be able to see, with a little bit of practice, it may be a little foreign the first time you see one, but with a little bit of practice, you'll be able to see, or if you want to send it to me and I can tell you exactly how much money is coming in, exactly how much money is going out, and whether the calculations of the title insurance company are correct. Then this guide here gets into the closing process, and again, talks about the closing disclosure, the HUD-1 settlement statement, the loan estimate. You want to make sure there's now some new rules in place that your loan estimate can't be made up after the settlement statement is made. The loan estimate has to be before you get the settlement statement, and they have to match. You know, there was a time period where the banks were creating the estimates after the settlement statements had been created so that the estimates were really accurate, but then that kind of defeats the purpose of the estimate. So under various federal laws, new lending laws, you do have to get the loan estimate, and then it has to be relatively close to what the closing disclosure or settlement statements say. And there's some variations there. One of the other things that this guide brings up is that for years, closings took place at the title company or the attorney's office, and in particular in the county where the property was located. Now, that's been loosened up both by the Florida standard contract and by this day of Zoom and COVID and mobile notaries and all that other kind of stuff. So, you know, a lot of times if we were in Hillsborough County in Tampa, but we had a closing on a Pinellas piece of property, we might have to borrow someone's office in Pinellas County to do the closing. Today, that doesn't exist anymore. The contract says the closing can be wherever the parties decide to do the closing, and they don't even have to be in person. They don't even have to be there at the same time. You could have the buyers sign in the morning. You could have the sellers sign at night. You could have, I had one closing recently where the sellers were in New York, and so all the documents were sent up to New York. They hired a mobile notary. The mobile notary made sure all the documents were signed up properly. The buyers, I think, came into the title company and signed up the closing documents. And then one of the other jobs of the mobile notary was to get all the documents back to the title company. Title company matched up all the documents. Boom, we have a closing. So it's not necessary anymore that the closing take place in person. It's not necessary that the parties sign at the same time. Now, a lot of times this came out of the short sale days where the sellers were understandably a little salty, for lack of a better word, because they're being forced to sell this house at a loss, and they're worried about what is the bank going to do, and are they going to pursue me? And a lot of times they perceive the other side, the buyers, as getting a fantastic deal. And so understandably, I know why the sellers may not want to be at the closing table when the buyers sign. But now we're getting back to a point where houses have equity, everybody's happy, everybody feels like they're getting a good deal, and maybe we get back to the days where buyers and sellers can sit in the conference room, talk to the title agent, sign the documents. Although, again, with COVID and the safety procedures that are in place in various businesses across the country, across the state of Florida, buyers and sellers don't have to be at the closing at the same time. Buyers and sellers don't have to sit at the table at the same time. They don't even have to go into the title company as long as there's the proper witnesses and notaries that can get their documents signed. This guide does go into the different types of documents that you would expect to see as a buyer: the note, the mortgage, the loan documents, any inspections, any reports, the title insurance commitment. And I've done a couple of other episodes here about the title insurance commitment, and I can talk more about the title insurance commitment and policy on later episodes if it's something you really want me to get into. Incidentally, as I record this, this will come out the week before Thanksgiving of 2021. At the end of November 2021, I'll actually be speaking at a Florida Bar continuing education conference about the closing process. So I'll be talking to title companies and closing attorneys about the closing process, things to watch out for, practice pointers, various other tips about how to do a closing and keep everybody happy. Now, again, this guide does get into title insurance a little bit. And it says here, title is the foundation of real estate ownership and refers to your legal right to own, use, control, possess, or dispose of the home. And that's basically conveyed or documented by a deed, whether it be a warranty deed, special warranty deed, or quitclaim deed. Now, a lot of times a quitclaim deed cannot be the basis of a title insurance policy, only a special warranty deed or a warranty deed. And again, the difference in the types of deeds are things that I've talked about many, many times here on the show. So if you're interested in learning about the different types of deeds, you can search the back catalog of podcast episodes. And again, maybe I'll see if I can link to some of those previous episodes. So again, title insurance is exactly what it sounds like. It is insurance that your title as the buyer is good. It's insurance that says nobody's going to come and challenge your title to the property. Now, interestingly, I had a situation like this arise recently. I have a client that bought a piece of property from a real estate investor, got title insurance. Now, within a couple of months of that closing, was served with a lawsuit. The person that was the owner, the person that the investor bought from, there is an allegation that that person lacked the capacity, lacked the ability, the mental capacity, the mental ability to enter into that transaction and sell the property to the real estate investor. And so they sued to declare all the deeds subsequent to that first owner, the incapacitated owner's ownership, all the deeds after that, including the deed to my client, to be void or voidable based on the lack of capacity of the person originally in the chain of title. Now, luckily, my client did get title insurance from a title insurance company, and so I collected up all the documents, sent a letter to the title insurance underwriter. Here's the title claim. Here's the lawsuit. Here's the policy. Here's the effective date of the policy. Here's the allegations in the lawsuit. Here's the settlement statement. Here's all the other relevant documents. Please defend the lawsuit. And they're doing that. Now, we're really, really early in the process, so I can't tell you the result. But the title insurance underwriter is going to defend the lawsuit and defend my client's ownership of the property. Title insurance is a premium that's only paid once at the time of the closing. Now, there are two types of title insurance. There's owner's title insurance, which, like I said, protects the owner, and there's lender's title insurance. Now, interestingly, in this case I just mentioned, the mortgage company is also a defendant in the lawsuit because the person that says they were taken advantage of, the person that says they're incapacitated also wants to eliminate the mortgage company's lien from the mortgage that allowed my client to buy the property. And so the mortgage company is also a defendant in this lawsuit, and I suspect that the mortgage company will also make a title claim to that same underwriter, and so now the underwriter will be defending both my client's title and the mortgage company's title. The bottom line here is, regardless of what happens, my client is getting a defense for free based on the title insurance policy, and if the plaintiff should win and prove the incapacity and prove that they're entitled to get this property back, presumably my client would be protected in that the mortgage would be paid and they would probably be compensated based on the face value of the title insurance. The one risk that I think my client has is to the extent they improved the property, they may not be entitled to that money. They may only be entitled to the face amount of the policy. So, again, for those of you that are curious, send me an email. I can maybe do a follow-up episode when this issue is over. Now, I don't know when that would be because we literally just got started. I think I got the acceptance of the claim by the underwriter yesterday as I record this. So, but if you're curious as to what happens, keep up with me, email me, reach out to me on social media, and maybe when this episode is over or when this issue situation is over, I'll do a follow-up podcast episode and talk about it a little bit more. The interesting thing here is that either a buyer or seller can purchase the title insurance policy. Now, in this part of the state of Florida, and I'm in Tampa, in this part of the state of Florida is what we call seller pick, seller pay. So the seller's going to pick the title agent, and the seller's going to pay for the buyer's title insurance policy. The buyer's going to pay for the lender's title insurance policy. And that's just the custom, and that's the way that it's evolved here in the middle part of the state. Now, for those of you that think it's strange, I agree with you. It makes no sense that the seller would buy the owner's title insurance policy. It makes no sense that the seller would buy the buyer a title insurance policy. But that is actually the way the majority of counties treat this issue. And so it is more common than not in the state of Florida that the seller is going to buy the title insurance policy for the buyer. And I guess maybe that makes a little bit of sense in terms of it's the seller saying, I know there's nothing that impacts the title to the policy, so I'll buy it, or the title to the house, so I'll buy the policy. Now, there are other counties in the state of Florida, down south, Sarasota, Manatee, down in South Florida, Dade County, Miami-Dade County, Broward, Palm Beach, that are called buyer pick, buyer pay. And in those states, in those counties, the buyer pays for both title insurance policies, their own title insurance policy and the lender's title insurance policy. Now, with the payment of those policies, the buyer gets to pick the identity or who closes the loan. So in this part of the state, where it's a seller pick, seller pay, the title companies want to meet the listing agents because a lot of times it's going to be the listing realtors that control where the closing goes. In other parts of the state, Sarasota, Manatee, South Florida, where it's a buyer pick, buyer pay, the title companies are going to want to meet the buyer's agents and the refinance companies because they're the ones that are going to pick where the closing happens, which title company does the closing. So that's why, depending on what part of the state you're in, may be different. Now, this is negotiable because it's a contract. And so if you're in a place that's seller pick, seller pay, like Tampa Bay, for example, but you negotiate with the other side that the buyer is going to pick the title insurance company and pay for the owner's policy, you can do that. There's nothing wrong with that. In fact, you could even negotiate where the buyer's going to pick the title company, but the seller's going to pay for the title insurance, or the seller's going to pick the title company, but the buyer's going to pay for the title insurance. All we're talking about is a contract, and it's all negotiable. So whatever you want to negotiate is fine. It doesn't always have to be seller pick, seller pay, or buyer pick, buyer pay. One thing that this guide here does get into is the title agent. Like I said, the right to choose who the title agent is going to be. And basically, the title agent or the closing agent is going to be the one to prepare the title search, prepare the title insurance commitment, and later the title insurance policy based on the closing, prepare all the closing documents, conduct the closing, disperse all the money. So there's a couple points here in terms of how to select a title agency. And I'm going to read this directly from the guide. But again, I'll put a link to the guide so that you can pull it up if you want to read this for yourself. So, number one, Ask people you know who have recently purchased property if they were satisfied with their title agency and get a referral. The best way to get a title insurance company, I think, is by referral. Number 2, your real estate agent or lender may recommend one or more title agencies they're familiar with, although they cannot require you to use any particular title agency. Now, there's so much going on in a closing that typically what happens is the buyer or seller just says, yeah, use whoever you want. But know that the agent can't force you, the realtor, the lender can't force you to use a particular title company, but they are very familiar with title companies and can certainly recommend and refer one. Number 3, contact more than one title agency to compare costs and services. Now, title insurance premiums are set by the state of Florida. However, the agent's portion of the premium and the title agency fees may be negotiated. So compare these costs among the various title agencies. There are certain costs, the premium that's charged, the transfer taxes, the documentary stamp taxes, in other words. Those things are set by statute, are promulgated rates, and cannot be changed. But there are some fees in here that the title company does have control over and can change. So you are allowed to shop around for what you think are the best rates. Number 4, I think we're up to. Make sure any title agency you're considering is licensed. You can check by visiting the Department of Financial Services website at licenseesearch.fldfs.com. Again, licensee search, licenseesearch, licenseesearch.fldfs.com. Or call the Department of Financial Services and ask them. If it's an attorney, you can call the Florida Bar, or you can go to floridabar.org to see if the attorney is a member of the Florida Bar in good standing. And again, last, be sure to consider the experience of the agency you choose and its reputation for fairness. If possible, talk to other consumers about their experience with the agency, and be sure the agency professionals are able to answer all your questions about the policy you're buying and about all the fees required for the closing transaction. Ask questions. And again, check them out. Does this agency have a blog? Do they have a title insurance calculator? Do they produce other content on YouTube, on social media? Check them out. Do your due diligence. Type their name into Google with the word complaints after it and see if anybody's filed any complaints against this particular title insurance company. Again, the guide here goes into some title insurance tips. Tip number 1, shop around, negotiate the fees. Tip number 2, make sure you know what your title insurance policy does and does not cover before you purchase it. Coverage changes may result in premium changes. There may be certain things that are covered. There may be certain things that are not covered. Again, title insurance is like any other kind of insurance. It's going to exclude known issues. The biggest one, for example, if you buy a property with a mortgage, your title insurance policy is not going to cover the mortgage that you take out to buy the house. So if you default under that mortgage and the mortgage company starts a foreclosure, that's not a situation that's going to be covered by the title insurance policy because you took out the mortgage. You know it exists. But if there's a previous mortgage from a previous person in the chain of title that was never satisfied, and that mortgage company starts a foreclosure and you didn't know about it and it was not found in the title search, that would be something that probably would be covered by the title insurance policy. Number 3 tip here, if your real estate agent, mortgage broker, etc. recommends a title agency to you, ask whether they have a financial interest in the agency. That must be disclosed. And so when I owned a title company, I would always have to disclose that any legal work that I did was for the title company that I owned. And I had to disclose it so that you knew exactly what you were paying and you knew exactly what I was making on the deal here. Number 4, be sure to read and understand all the documents you sign at closing. Now, if you have questions, that's what the agent is there for. That's what the notary is there for. Go ahead and ask questions. I remember a closing once where the buyer wanted to read every word, and it was a lender package, so it was relatively thick, and the buyer wanted to read every single word. And what made it even worse is that I was feeling under the weather. And so I had to sit there while the buyer read every single word, sniffing and coughing and blowing my nose and just feeling like garbage way prior to the days of COVID. And I just basically had to sit there and deal with it. But I answered every question and helped them get through the closing, and we did it. So make sure you understand what you're signing. Make sure you read, if you want, what you're signing. Last tip here, be sure the policy properly describes all the property and interest you're acquiring. Now, this is a little bit more difficult because in Florida, property is described by its legal description. So you're going to have to make sure that the legal description is correct, more so than even the address. You're going to have to make sure the legal description is correct. Now, the way that I verify that is I look at the last deed or 2 or 3 in the chain of title and make sure that that legal description carries all the way through. Review the survey. Make sure the legal description on the survey matches the legal description. Look at the legal description in the deed that the seller's giving you. Look at the legal description in the title insurance policy. Everywhere you see that legal description, it should match. And if it does, good chance the property is properly described. The guide then goes into some common title insurance terms and definitions. I'm not going to go through a lot of these. Maybe if I see 1 or 2 that really stand out to me, but I've gone through a lot of this stuff. Then finally, finishes off with a frequently asked questions section. The first question, why is it taking so long to get my deed? So part of the issue here is the deed has to be sent to the county to be recorded and then come back to the title agent, and then the title agent has to send it to you. Now, some title companies use what's called electronic recording or e-recording, and so you can get your recorded deed right there at the closing table. But if the title company has to send the deed into the clerk of court, then just based on the fact that there's hands touching it, human hands touching the deed to get it recorded, may take a little bit of time to get to the title, to get to the clerk of the court, get recorded, get back to the title company, and then get back to you. However, the date of your title insurance policy is going to be as of the date of the recording of the deed. So you will be protected regardless of how long it takes to get your deed back. When should I get my policy, my title insurance policy? Well, again, you probably will get your title insurance policy when you get your deed. When the title insurance company gets the original recorded deed back, they prepare the policy and they send everything out all at once. So you should get your original recorded deed and your original signed title insurance policy. Keep both of those documents where you can get to them so that if you need them, they are available. If you want to scan them in, you can. One other interesting thing, you may get in Florida a letter after the closing from some company. I don't even remember the company's name, but the company says for $80, we'll send you a certified copy of your deed. That's a scam. Don't fall for it, because you can go onto the county website for free and pull a copy of your deed. If you want it to be a clerk certified copy, meaning the clerk stamps it and says this is a true copy of what's recorded in the county records, I think that costs you $1 or $2, maybe $1 or $2 per page. So there's no reason to pay anybody $80 to get you a document that you can probably get for free or less than $5. So don't fall for that scam. Another frequently asked question here is my title agent or agency licensed in Florida. Again, we talked about the licensee search, the Florida Bar's website. You can go there and double check. Is the title company licensed in Florida? Same thing. Here's a good frequently asked question. My title agent was supposed to provide me with a gift card for referring business to them. Well, unfortunately, attorneys cannot split fees with non-attorneys, so you should not get any kind of gift card or payment if the closing agent is an attorney. If it's a title agent, they're prohibited from providing or paying for food, drinks, or room rentals at events designed to promote their business. They're prohibited from paying advertising costs for real estate brokers for referrals. They're prohibited from sponsoring and hosting open houses for realtors. They're prohibited from providing or paying for gift cards or gift certificates for the referral of business. They were prohibited from providing or paying for cellular contracts for business referrals, and they're prohibited from offering any discount or reduction of any fee of the cost of an inspection report, appraisal, survey, wind mitigation. There's a whole bunch of other prohibited activities that title companies cannot do. Now, can they give a gift? Yes, but they can't give a gift for the referral of the business. So they could potentially give you, like I remember at one closing where I was buying a house, I got like one of those plastic containers that had cleaning supplies in it. I think that's fine. Or maybe I think at one closing I got cookies or something like that, and that's fine. But I think what makes it a prohibited practice is if the gift is in exchange for the business. I think if the gift is just, hey, we give this gift to everybody that we do a closing with, and it's a gift from us to you, congratulations on the purchase of your new home, I think that's fine, as long as it's not in consideration of the referral to the title company. So again, that's it. It's from the Chief Financial Officer of the Florida Department of Financial Services. It is dated October 2020, but I think it's a pretty good guide to closings and guide to title insurance. And so, again, I'll post the link here in the notes so that you have access to it. And again, if you have any questions about real estate closings, if you have any questions about title insurance, please reach out to me. You can find me on social media. You can find me at sean@yesnerlaw.com. And I hope that at the end of the month, you have more money. Rather than at the end of the money, you have more month. Next week's going to be a very special Thanksgiving episode, and so I look forward to talking to you in next week's episode of the Crushing Debt Podcast.
If you have questions that you think would make a great topic for a future episode, please email Sean or connect with us on social media. Sean Yesner and Yesner Law, PL, are Florida licensed attorneys. The information contained in this week's episode is not a substitute for legal advice. Your situation may differ, especially if you are located somewhere other than the state of Florida. If you have questions, please contact our office or contact a local attorney. Thank you for listening to this week's episode of the Crushing Debt Podcast.